Hello, Camillo. Welcome to the Builders Podcast. It's a pleasure to have you here today. How are you?
I'm good. Thank you very much. Pleasure to be here.
Great. It's a pleasure. Absolutely. Would you like to give us a little bit of background of yourself? Who are you? Where are you coming from? And of course, for Sinpex as a company.
Yes. So I grew up in Germany in the southern part, close to the Alps, and then studied engineering. So very typical for a German. And I worked as an engineer. And then at some point, I realized that I actually do want to do something else and build something, and decided to study something with business. And then I moved actually to the Netherlands and studied in Groningen.
Nice.
And so, yeah, I've had a very good time in the Netherlands, studied there international business, and then had the opportunity to move to London and start there at the LSE, and got in touch with investment banks, but also with consulting, and then started to work at Deloitte. And then for the first time, I get in touch with the KYB topic and realized that there's a market opportunity. So this is then actually how it started with Simpex.
So Sinpex was actually your second job overall after Deloitte, or
Yeah, exactly. So I entered consulting then after university, um, and they sent me to a large financial institution in Germany, and they were I was really in trouble regarding compliance. And I was there as an analyst first, and I had first-hand experience with the problem. So I really got into the details, saw what they're struggling with, but always had this engineering background where I was basically trained to solve problems not manually, but with a technical solution. And this was then the starting point where I started to build myself algorithms to just get more efficient. And at the same time, I started to realize day by day that there's something broken.
yeah, and let's say first of all, consulting is always a very good school under that point of view. So we share that background, and it's always common to say that 1 year in consulting is like 5, 7 years everywhere else, and I strongly agree with that. So obviously a good school, but let's focus on the problem a little bit. Coming from
Mhm.
this market. KYB and KYC overall are two of the biggest pain in the financial industry overall. So um, first of all, how do you see them in terms of being a problem on top of being a compliance necessity? And second point, most importantly, how do you solve them?
Mhm. So I mean, just starting off with the first point with the market, I think the problem exists for many years now,
Mm,
and the regulation was always there, and but I would say the maturity of the financial institutions treated this as a back office job, more than as a
mm,
necessity, and treated that as a tick the box exercise. So just to give you a first-hand example, when I was working at Deloitte, I mean, we have seen different banks with different problems, and we were always the same thing. They said, "Oh, well, we have here a CRM, and an analyst just puts the information in
mhm.
manually, and we store the document in our SharePoint." So, um,
Not the
sounded pretty.
best idea ever.
It was very clear that the budget is not going into these, let's say, compliance functions. But I think in the last decade, this has significantly changed.
Mm,
The regulators are becoming, or the watchdogs are becoming very strict, but also very powerful. And I mean, you see in the press, and you see in the news everywhere. I mean, if a compliance and a KYB issue or KYC issue hits the company,
mm.
the watchdogs, they start putting, let's say, penalties on it, and one very common initiative is stop new business for a certain period
Yeah,
of time and say,
that
okay,
is also very common. Yeah.
you're not allowed to onboard customers anymore. And I mean, this is so painful. And I mean, what we see in the market, this problem just becomes a real business problem and impacts the top line. And that's why the attention is, from our perspective, currently totally shifting to that and say, okay, well, it can really hurt us. It can really impact the top line. And all of a sudden you have top management attention. And I think we are in the middle of that. I mean, if we look at KYC, KYB, it's often I think people often mixing it up if you're not really in the details. And I think for natural persons, KYC is, yeah, it's solved. It becomes more a commodity now. I mean, you have different providers, but it's pretty clear what you need to do, and it's not so complex. But for the KYB space, or for the identification, verification of business clients, this is there's real complexity, especially if you have ownership structures across different legal jurisdictions, so different countries. And yeah, and I think on top of that, what currently drives this demand in the market, or this growing demand, is the new EU AML directive, which is basically being enforced from 2027. So this is, I think, why this is such a hot topic at the moment.
Yeah, I totally agree with that. And I still remember, like, for example, in Italy, there was a very huge case about KYC slash KYB requirements for M26 at the time, when they were actually requested to pause onboarding of new customers in the country because they breached a couple of those requirements. And it's always a pain. And I also agree about the point that KYC in certain under a certain point of view, it's a little bit easier, you know.
Yep.
It becomes a commodity. You can actually use it with third-party software as a service. It becomes a little bit easier over time. Still a huge a huge conversion killer, but it becomes a little bit easier. When you need to do KYB, it's actually still a huge mess because you don't have a streamlined solution. You need different databases, different data sources. You need to make a lot of assumptions sometimes in order to understand where are those information coming from. And overall is quite tricky. So the major question that I have, and coming from, let's say, experiences doing that, is how do you actually connect with all of those different databases that are out there in order to find the information?
Very good point. I think that I think you mentioned this variety of data providers and yeah, options out there. And what we see is that a lot of companies actually struggling really to understand what they actually need to do according to meet the bare minimum of the regulation. And I think there's a big misunderstanding in the market at the moment, where companies believe that they can just pull information from a database without evidence and say, well, we collected some data points and we're good to go. And customers send us a commercial registry report. And maybe we match that data with a secondary data source, something like Moody's or Dun& Bradstreet or Bloomberg. I mean, there are a lot of company data provider. And what happens in reality, and I can tell you from first-hand experience when I was at Deloitte, I mean, you coming into these companies and say, well, you have a data record for a company, and then the auditor comes in and said, okay, I want to see evidence. Where did you find that information, and how can you prove that this legal representative and this ultimate beneficial owner was the real ultimate beneficial owner at that point of time when you made the decision for the onboarding? And then if they start digging, they want to see documents, evidence, and there's no way around that you then are in a position to say, well, I pull up here the commercial registry and with the clear date, and here it's stated that this is the legal representative, and for instance, the UBO. And if you fail on that part, so have not a clear audit trail ready with evidence, your defensibility becomes really weak. And this is one, I would say, probably the most common reason in the market why so many companies are extremely struggling now, because the regulator, they always come in and say, we want to see evidence and we want to see the documentation, and the documents cannot be older than 3 months from the time of the onboarding. So you need to show that you have current information, well documented, and basically back up your decision for the onboarding. And this is, I would say, currently the biggest problem in the market. And to be frank, I think there's also a lot of noise in the market, because the data providers, of course, they all tell you, yeah, well, here we go. You can pull the data in seconds. Yes, of course you can, but you're running in a compliance risk at the end. So, or you're left in a spot where you have heavy manual work to build up this documentation. And yeah, this is, I think, the biggest problem right now.
Yeah, the real problem that I see here is that those kind of information should be like really up to date. I mean, and it's kind of impossible to do that. I mean, you do not have like a data source that is telling today at this present moment in time if a person is actually a owner or a director of a specific company, because maybe the last document when they updated that is 6 months old. So
Exactly.
that is a huge problem. And I think that that's also pretty hard to solve. You can actually start a database like that, like the government. All governments, for example, in Europe, they have different databases that you can pull information from, but you will never have all the information up to date in the same place. So you need to do a little bit of assumption. You need to work around it a little bit in the end, right?
Yep. And I mean, this is exactly where Sinpex started. Or so I had this first-hand experience with how banks are currently trying to get around this. And the answer was always manual work.
Yeah.
We put more people in the compliance team. And
It's not always working, unfortunately.
and I mean, you have different problems, right? The human
Yeah.
error, very not, let's say, the process is not really stable because humans are make random issues, so you cannot fix them in a structured way anymore. So there are a bunch of problems. But
Yeah.
I mean, where Simpex then started is to say, okay, well, let's try to do what the analysts are actually doing every day. Let's go to these document sources. Let's go to the Dutch KVK. Let's go to the German Handelsregister, and build a connection to those registers directly and see what we can get in let's say, primary data, because they should have the most recent information. Probably you have these time lags of 2 or 3 weeks when something gets registered, and then they publish it 1 or 2 weeks later. But in the majority of the cases, this is the golden source. And so we started to build up these connections to access these documents, which the analysts would collect manually, either from the customer or log into these company registries themselves, to streamline this. So to get direct access to evidence immediately. And this was the starting point for Simpex. And then we started
Let me ask you one question here. How,
yeah.
how hard it was? Because I've been dealing with those kind of databases multiple times, and I know that it's not that easy as it seems. I mean, most of them are very, very old. Most of them do not even have APIs. So
Yeah.
how hard it was in reality to do that first step?
It was unbelievable hard, and
Yeah,
we totally underestimated that, to be honest.
yeah,
It was a nightmare.
I can
So
see that, to be honest.
it was like, well, there's an API. Well, the API is not working. Well, we go with a web scraper. Well, the web scraper, they changed the website. Damn.
Yeah.
So we went through all of that. And I mean, we started this 7 years ago. So the good news is something has changed. So some things are getting better. Now there are APIs, depending on the jurisdictions. In some markets, we also work with aggregators. So in some jurisdictions, there are, let's say, companies which build these integrations to these registries in multiple regions and just expose an API so they solve, let's say, these nitty-gritty detail issues for you. So we decided to have a dual approach, do direct integrations, but also have, let's say, aggregators in the background who help us in a given area on the world. Because it's also important to have global coverage at some point. So,
Of course.
and this was another level of complexity, but I mean, we spent probably 3 years to get that right.
Wow, that's challenging. I mean, the first step of 3 years is kind of challenging.
Yeah, but yeah, I mean, at the end, you have to go open source, and
I totally agree with that. I mean, you cannot build something like this without, all the sources in place, and it's absolutely clear. But then let's fast forward a little bit, because you actually recently a funding round to do that.
Yep, yep. I mean, we started, as I mentioned, 7 years ago, with a very small team, built the product over the first 3 years, then launched, and I mean, we landed major financial institutions, and then also went through audits and with watchdogs in the background. So we went through all of that and started to build a very robust solution. And I mean, we're very proud that our customers, multiple years now, some of them are 5-6 years in a row with zero findings in the audits. And I mean, this is really rewarding for us, and this motivates us to keep pushing the limits. And I mean, as of today, we operate in Central Europe. We are very active in different markets. Our customers are onboarding customers from all over the world. And what we do is, from the first point of contact to the customer to the last point of the onboarding, with Audit Trail, we enable our customers to streamline this as efficient as possible. And last year we had I would say 18 months of incredible growth on multiple levels, and decided to start talking to venture capital firms again. And then we realized that there's a strong demand, and also competition is starting to happen. I mean, there are the companies starting to build KYB products, and then we saw a strong momentum also in the VC market to come in, and then we decided to go with BlackFin, and then we raised 10 million.
I have a couple of questions on this one. So, first of all, I would like to understand how hard it was for you to raise that round, because this is a question that I usually ask to all startups, because in different time frame we saw these kind of things being harder or easier depending, on the environment, of course, on the company, on the liquidity presence or presence in the market and everything else. But I would like to understand your personal experience in this one. So, how hard it was for you to raise a fund?
This time it was, I would say, it was much easier than before. But I think there are two reasons for it. The first reason was we had really really good numbers, and we have or there was a clear proof that this is not just a vision. It was a very clear proof that major financial institutions are doubling down on us and increasing the contracts with us. So it's not just we have a small contract. It's we had a a decent contract and we make it a big contract now, and we get fully integrated through the whole organization.
With the same customers, like meaning
Yes.
you have the same customers actually coming back and asking for a bigger deal.
Yes. Exactly.
Okay.
So this net revenue retention is I mean, VCs are looking at, I mean, as a venture capital firm, I want to understand, first of all, does this problem exist, and is there a clear product market fit, and can Sinpex solve that? And I mean, we made that point 3 years ago. We can solve that. But then all of a sudden there's competition, and as a venture capital firm, what I personally saw, they say, okay, product market fit is there, but now is this really the one solution out of the bunch of solutions out there which has the potential to become this billion-dollar company and outperforms everyone else? And I mean, if all the companies are more or less in the same stage, but what I think what set us apart from the rest of it is that it was a very, very strong signal from our customers. They say, well, this is so amazing. We're doubling down, and we decided to completely orchestrate this through our larger organization. And usually you start in one department and then they roll it out completely, or they keep it in the one department if they're not sure. And I think this was for us a major enabler for the round, and made us at the end, helped us to raise that round relatively easy, because there was very, very strong evidence across our customer base that they love the
That they really
solution,
wanted that.
they
Yeah.
want the solution, and they're extending and rolling it out very quickly. And this, I think this was just a double confirmation on our product market fit. And this
So
enabled us then.
in the end is actually, numbers driving the, let's say, the finalization of the round.
Yes,
But
yes.
I also would like to reverse that question. So how do you decided that the investors was right on the other side? So you said you went with BlackFin, but how do you decided, okay, they are the right partner, they are the right investors. I want to work with them. I want them on my cap table. Out of all the term sheet that I have on my table, I choose this one.
So, I mean, we were in the situation that we had multiple term sheets. And then, of course, at the end, it's the question how much they can really help beyond money. I mean, money is the one thing, and great that you have a lot of cash at that point, but you want to spend the money wisely, and you want to have a partner on board who can help you in the next phase and has a strong expertise in your domain. So it's not helpful to get the money from a B2C investor who knows how B2C works. We wanted to have an investor who's specialized in financial services and have a very clear understanding of our product, and actually is challenging on our product, and bringing in a network in that space to scale the company. And this is what we saw in BlackFin. I mean, BlackFin is a financial service investor. They
Yeah.
don't do B2C products, or probably financial service B2B products, but they don't do anything else. So they are really, really deep in the industry. And what we liked in the conversation, that we can have a really helpful conversation about our product and the market, because they understood what we do. And we had the impression from other VCs, they knew that KYB is a hot topic, but then if we dive deep into questions about how the regulation is changing about UBO calculation, and there's I mean, this now gets in very detailed, but a dominance method or accumulation method, which is becoming the new standard in Europe. I mean, BlackFin was the VC who told us, well, we understand these differences, and this sets you apart, and that's why we like you so much. And I mean, yeah, that's we looked
So
for a
from,
partner
let's
who
say,
can
you
really
did a
help.
little bit of due diligence on them too, in terms of technical expertise. So you wanted them to understand, uh, how your product works, how the dynamic of the market
Yep.
work, and everything else. It's kind of a pretty good point. And in the end, it was also important for you that they were able to maybe I wouldn't call it do a little bit of business development, but at least, push in that direction or bring, let's say, something in the direction of business development, or you just wanted them to be able to contribute product wise?
No, so I think there are two things. The first thing is we wanted to have an investor who understands the problem and our product. And a lot of investors understand the problem, but not the product and why
Yeah,
we are
good
so
point.
different. So the key differentiation was important, that they understand what we do differently and why this is the impact which wins at the end in the market.
Mhm.
And this part was clear. And the second point was we wanted to have someone who helps on us on the business development and have a relevant network.
Yeah,
And since they are so specific on financial services, it's absolutely the right target group for us. And
makes a lot of
the
sense.
combination of the two things made it for us very clear that BlackFin is the partner of choice.
That's very interesting, to be honest, because usually, let's say, the product side is a little bit underestimated, in my opinion. So
Yep.
when talking about investors, of course, the first thing is the capital, is the ability to invest on your business, and that's okay, that's fair. But then everyone is taking a very good look at the possibilities that the investors can also bring a little bit of business development, meaning, the network, the contacts, can you get me on a call with, I don't know, with Revolut or
Yep.
with JP Morgan? And that, of course, has a lot of value. But they usually don't talk about the product, So
Yep.
they understand the product maybe, but they are not very deep dive on that. And I think it's a very good point to actually have that kind of experience, that kind of interest on the product itself. It makes a lot of sense. Um, and you have been talking about the dynamics and the trends, and I would like to ask you a little bit more high level. How do you see this market going? I also have been in Germany in the fintech market for a while, and I saw the rise and decline, let's say, in terms of valuation, in terms of hype, interest,
Mhm.
and I think that we are kind of going back, to a positive trend. But I
Yes.
wanted to ask you, how do you see this market right now? Because I feel positive vibes, to be honest, but I would like to understand it from you.
I also I see that I think I have the same feeling, the positive vibes, but of course I haven't seen the most recent numbers. I mean,
Of
we see
course.
how much investments,
Yeah.
the deal volume. From time to time, you see these things on LinkedIn, and one or the other investors are publishing their data. So I haven't seen the data, but the feeling I have is the fintech space is recovering. Um, Not all of them. I think I mean, there was a lot of ESG hype.
Mm,
I would say 2 years ago. I think this became very quiet, and I think it's shifting more to these, let's say, topics like compliance, which is pretty clear that this doesn't go away. The problem. What I also see is that these agentic AI topics become again interesting, and I think it's a typical hype. It's new, everyone likes it,
yeah.
or have a lot of imaginations what can happen with it. And I think there's a typical early momentum in the market.
Yeah.
Um, but also from a venture capital perspective, with all the uncertainties we have currently in the world, I think they're starting to deploy money again. Probably not as extensively as back in 2018, um, but I think we're back on a healthy environment where if you have a good product, you can raise money.
Yeah. Well, let's say 2018 was very good moment in time to raise money in fintech in Germany specifically. So that
Yep.
was an amazing period. But at the same time, it was a period of time when you had like maybe not realistic valuation,
Yeah.
and was not an healthy environment overall because you could do a lot of money in a short amount of time, and at the same time, be out of business the day after. So
Yep.
it was kind of a complex environment. And I think that I totally agree with you. Right now, we see a positive trend. we see a more realistic trends, in my opinion, also in Germany and in Europe overall. But you also mentioned something very interesting about AI and agents. So you were telling about you built the connectors yourself, how you're building those connections, those integration. Are you using AI to do that, or do you evaluate to use AI in your operations? Because it would be like pretty, rational, pretty logic to say, okay, I can do that on a scale using a bunch of agents, scouting the market and try to putting together all of those information. But I think that is actually trickier than that, right?
I mean, this is this wishful thinking which we all have.
Yeah.
And I also have this wishful thinking, but I mean, I can just tell you how it works at Sinpex. I mean, we're using these tools, of course, we're using these, and it's making us more productive. But we truly believe that compliance is a space which is not about, it's not about, it might be right, it has to be right. And there's really zero room for error. And that's why we use this really carefully in our analysis. But yes, we have a large AI component which helps us to analyze documents, finding information out of a very unstructured way. So, or data set. This is for sure what we're doing. It also speeds up the product development significantly. Yes, but I think we're far away from that agentic, having different agents and they do everything for you. It's not happening, at least not for us.
At least not in KYP, I would say.
and I mean, we're pushing that limit from time to time. So we also have dedicated sessions where we say, okay, let's push the limits for those things and assess if this really is the quality which we expect. And I mean, it's compliance. It's all about data quality. And we came multiple times to the conclusion, seems very nice. And yes, it's the wishful thinking we all had, but no, we can't put our customers at risk because we just do fancy ass stuff.
Oh, that
Yeah.
makes sense. I mean, in the end, I do believe that AI is a tool. So
Yeah,
it really depends on how you use it, how do you want to use it, and the quality of the outcome. So if the manual work or direct integration with API is better, then you just go with that, and you don't,
exactly.
put the risk or you don't lower down the quality of your work. So it makes a lot of sense in the end. Things
Yeah.
could change, absolutely yes. So probably the AI that we have like 3 years from now, or even just 2 years from now, will probably be able to do wonderful things, but maybe not right now, and not.
Oh, I lost you.
And yeah, maybe one last point that I was wondering about, the next steps for you. So you just closed the round, you are expanding. What would be the next big thing for Simplex on your side?
Yep. So I mean, we raced around. We have a clear growth path, and we're continuing on that path, expanding across Europe. But we also see that we have first um, incoming customers from the US and expanding also with our customers to other markets. So this is clearly the path, and the next big thing is I think that we become the undisputed European leader in that market, and this is where we're currently focusing on. And I mean, there's a lot of movement in the KYB space. So you see here and there a new provider starting off, or started probably 2 years ago, trying AI agents and stuff like that. But yeah, we are really happy that we have this competition, because I think it makes every one of us better in
Makes
the
an healthy
market. And
space, I would say.
and
Otherwise,
it's good.
there are some problem if no one want to do what you're doing. So uh, that makes sense. But you were mentioning the United States. This is a topic that we didn't touch. How do you see the difference between Europe and the United States under that point of view?
This is actually a very interesting thing, because I think this is KYB is a rare, one of these rare examples where Europe is more advanced in technology than the US.
Really?
So why is this happening? I mean, we are in Europe, we are really good in regulation. So we do a lot of regulation.
Yeah.
And the environment is just there, and the problem exists here more than in the US.
Hmm.
So here the companies are struggling with the regulation. In the US, the regulation is not that tight. But they're starting to have the same problems. They have the same problems of business onboarding, but the bar is just not here. It's lower than in Europe. And what we see with US companies, their problem is here in Europe. They say, we don't understand how regulated you are. I mean, it's so complicated, and we need to do so many checks to make sure we onboarded the right company. And they're all focusing on Europe at the moment. And this gives us, let's say, a nice environment in Europe to build
An
basically here
advantage, basically.
technology. I would say it's an advantage at the moment to be in Europe. I understand this, or to find a way to solve this regulation with technology. And once we solved it, it's easier to expand to the US because the market is easier, the regulation is easier. Of course, you have questions about availability. You have this state by state, let's say, diversity problems which we need to solve. But if you solve it in Europe, it's pretty clear you can solve it in the US. And
Do you think that it's more an advantage, let's say, for US-based companies to come to Europe to have someone like you that can actually solve the problem, or it's going to be also an advantage for you to go there and do the same, setup in the US? Because I think that there is a little bit of difference between the two setups.
I mean, we are in talks with a lot of US companies, focusing on the Europe market, and say Europe is our problem at the moment. And we
Hmm.
want to understand what technology can do. And we looked in the US. So usually US companies love to work with US companies because they're bigger, faster.
Yeah.
You know that. But they didn't find anything in the US which can solve right now the European problem. And so this gives us I would say, a nice momentum and a nice opportunity. But I think it's an opportunity for whole Europe to build something which works here and then expand to the US. So it's as I said, it's really rare that you have this constellation. Usually, it's the US is more
It's the
advanced,
opposite,
and
yeah.
then they push it into the European market. But I think with that in that KYB space, it's the other way around. But
It's very, very interesting, but because I always found the opposite situation,
yep,
mostly when coming to certain kind of markets. In fintech overall, it's absolutely the opposite. But I think that there are a certain kind of trends and certain kind of, let's say, topics when our regulation is actually boosting the kind of innovation and growth of certain companies. KYB is one, of course, as you said. The other one, in my opinion, is digital banking, where
yep,
we do actually have in Europe and in the UK, for example, better digital banks compared to the US, for example.
yep,
So this is a very good example, to be honest.
yep.
Maybe last question from my side. What would be an advice that you can give to someone else like you out there that is coming out of university, maybe did a couple of years of consulting, that
Mhm.
wants to start, his own companies, want to start a startups, and what would you advise to them?
I think that the first advice is start as early as possible.
Hmm.
Um, so I think you don't have, if you want to to start a company, do that early on. So after the bachelor's, I think it's fine because everything what you get taught in the university helps you to solve problems, but actually prepares you for a corporate career, from my perspective. And founding a company is a complete different exercise.
Yeah.
And you need to have your own experience, and you need to solve problems which nobody prepares you for that. So you should do that as early on, because the longer you do that, the more resilient you become. And I think this is very important as a founder. You have these ups and downs, 100% sure. The only question is when it hits you. And you, so I mean, I did a PhD at some point. It didn't help for founding a company at all, to be honest. I mean, for a corporate career, yes, of course, probably.
Of course,
But
very useful.
for startup, it's not useful at all. um, but so my first advice would be is start as soon as possible. And the second thing is look for mentors. So what was
Mm,
really helpful for us was having experienced entrepreneurs, but also experienced executives from large organization who helped me to make critical decisions. And sometimes you have to let someone go. And in my case, it was the CTO at some point, really
mm.
early stage. And I mean, these are super tough decisions, but you need to make these decisions, and
Yeah.
you need a sparring partner to assess these situations and then execute fast. And this is something what I would say, start early on and get the right mentors on board. And once you have that, go, go. And
So I would say that the best feedback here would be get first-hand experience on those kind of things you want to do that.
exactly.
Like nothing would prepare you to what is coming. So just dive in and try it out and see if it's something for you or not.
And yeah, exactly. And do that
No, it's a
early
very
on.
it's a very good advice, I would say. Also coming from that experience, yeah, I strongly believe there's nothing out there that can prepare you to what is possibly running a startup. So absolutely agree. Camillo, again, it was a pleasure to have you here today. And it was a very interesting conversation. Thank you very much for your time, and good luck for everything that you're doing in your career.
Likewise, it was a pleasure. And see you soon. Thank you very much.
Thank you very much. Thank you. Bye bye.
Bye.